Investors and traders, welcome to the channel. Market chart pattern today is 2nd of July 2024. I hope everyone is having a great day. So we'll be taking a look at the key US stocks for this video segment. As always, this video is for educational purposes only and it is not a financial advice. So we are taking a look at the daily chart of Tesla. Tesla had its earnings come out today, and it has had a fantastic uh, price action today. It was up by several percentage points. The trading view is telling me it was up by $21.40, which was 10.2%. So a fairly, well, actually a very positive day for the Tesla shareholders. And this stock has been in a downward trend for quite a while. We picked up quite a few bottoms here. We had some patterns which failed. This big one, the big ABCD you see in blue, is the one which kind of caught the bottom, so to speak. But it did go a little bit lower to the 78.6% retracement, which I'll just show you on the weekly chart. So here, what is really important is what we had been discussing is actually this $200 per share level, because that was the 38.2% retracement from all the way highs of the 19th of July 2023 to the lows which came in the last earnings when Elon Musk started to talk about um, lower price Tesla cars to compete with China, and he also gave a deadline, so to speak, for the robotaxis as well, which is in August next month, so approaching pretty quickly. And we saw the market actually move in gaps here. I believe these gaps are because of short covering. So those short sellers, they started to cover up, and then this gap got filled. There was a chance that it could come down to 155 and fill this gap, and this gap remains open. So what we'll do is we'll mark it as an open gap here, like this. And the gaps do get filled, but sometimes they take a very long time. And the way the stock is moving is, and especially after closing above the 30.2% retracement, that this gap actually might remain open for quite a while, which is good for the stockholders, people who are actually long the stock. And one of the things which I'll just discuss on the weekly chart, but yesterday, 1st of July 2024, the market had actually closed above the 38.2% retracement, and that was telling us that okay, the stock was actually beginning to look good because of closing above our key level. And today we got the second confirmation. Now we have two consecutive trading days where the stock has closed above this key level, and from a momentum perspective, it has closed above the 200-day moving average. It is also, the price is also above the 20-day moving average, which is above the 89-day period moving average. So what it means is that the momentum on the daily chart is also improving. And the other really interesting thing is that if we were to look at the concept of bearish symmetry, this is what the BC swing was in this big ABCD, and the market has also closed above that. So a lot of elements which were bearish for the stock, the today's price action in particular, has actually closed above those, which is bullish in my opinion. So the Tesla has turned bullish. We are now will be watching for the key levels which are slightly above where the price is currently trading. So we move on to the weekly chart. This is the weekly chart of Tesla, and here what you see is this ellipse here. This is the pattern in we were talking about when we did the video about the tech stocks and Tesla patterns last time, and we counted the number of weeks the market has been just in this sideways trading price action. And what this ellipse is showing is actually a higher base level, and this is what we're talking about. So it's like a propeller shaft. I like to call it a propeller shaft pattern. It's usually something which we normally see in stocks, We might not see this too much in commodities. Commodities move in a slightly different way. They move actually a lot more in an ABCD one-to-one price projection manner. Stocks could have a leg which could actually extend beyond the 1.618 extensions, but that's a topic for another time. So this is the propeller shaft pattern we were talking about, and what we have seen is actually the market really close above that. We can draw a small sort of an ABCD like this just from this propeller shaft pattern, like this. So this is where the market is pretty much, and also we have this 61.8% retracement coming around 236, and above that the 78.6% is 265. So I'm guessing the market is going to get into this box where it could find some sort of resistance, perhaps, and also this could be the shorter term target for it, and the market could consolidate for some time. But the chances are that we are in fact now starting this CD leg higher, the red lines that you see here. So that's A, B, C, D to the upside. Now I've not labeled these. I think for the next video I will do that. And if our analysis is correct, which the chances are it is, and we are in the CD leg higher, then it takes us to about $340 to $350 per share level. And you can see from the writing here, that has been our target for quite some time. We had a number of patterns fail around here because what was really disappointing was this one, because we really thought it might have been A, B, C, D higher, which could take us to 350. But now with this one and the way the market has actually prices performed today, the chances are we could actually in fact get there, but we have to get above these levels of between 340 roughly to excuse me 240 265. That's where we could see some resistance come in for this stock. Otherwise, looking good in my opinion, because it just closed above the $200 per share level. That is the 38.2% retracement in the strong trending markets. The 38.2% retracement level is really important, and if this market was more bearish than bullish, then I would have expected a turn to come in from a $200 per share to the downside. We haven't seen that, and if you see this channel formation here, the price, although the week has not closed yet, so a little bit early to say. Let me actually go back to the daily chart and see if I've drawn the channel there. No, I've not drawn the channel here. So going back here, it's above that. So if there is going to be a pullback, maybe the week is not closed yet, but assuming the week close higher, and if a pullback can come, then maybe we could expect a touch of the higher part of the channel, and then a resumption to the upside. So a little bit early to anticipate anything just because the week is not complete. And a really quick look at the really long term monthly chart. So this is the monthly chart of the Tesla stock. It's something that we used to look at, but we have not been looking at it for quite some time. It's still really for people who are long-term investors in Tesla, who really believe in the product, maybe the vision of Mr. Musk as well, and of course much more than that. Then there is a possibility of this ABCD pattern, which could take the stock to as high as $500 per share level. And we can see that this is a monthly chart. We saw the month of June close positive, and let's see what was the high, 203.20, which took out the highs of April, which were 198.87. So that is good, because what it means is it's start of a new trend, because it took out the swing high. Even if it does it by 1 penny, that starts a new thing. So really important how the month of July is going to perform. We'll have some structural resistance between 300 and 314, and ultimately on the weekly chart, the target, near-term target, would be $340 to $350 per share level, and the monthly chart has even 500 as well. We'll wait and see if that will pan out the way we think it might it might pan out. Now let's take a look at the Apple stock. So this is the daily chart of Apple. Apple was also very strong here. Long-term subscribers will know that around $265 per share level, in that vicinity of 275 to 265, we were bullish the stock, and we were waiting for the stock to get down here because of this pattern formation. Ultimately, there was a chance it could get to 263, which would have been a point we were actually watching. But the market just came down to around 265 roughly, and then from there we have seen a really strong rally in the stock. So we'll just take a look at this on the weekly chart, and here we can see on the weekly chart the market has actually achieved our shorter term target, which was the 1.618 expansion of this entire range that you see of 10th of July 2023 to the time the bottom came in around 15th of April. The 1.618 expansion, it reached that during the week of 10th of June, and then we saw a little bit of a pullback here. I'm not sure whether the market pulled back to 38.2%. No, it did not. I think it did 23.6 exactly. There it went. So it's a pretty strong. If it's able to take out the high of this, which I think I believe it did, high was 220 spot 20. Today is 220 spot 38. So there you go. So the chances are that in fact we are moving in this one-to-one price projection ABCD higher, and we could be looking at 235 to $237 per share level for the Apple. And of course, Apple, this big move that we see is the developers conference, where they actually unveiled some of their products in relation to the Apple Intelligence, and that is actually going to kick off a new cycle for the Apple products such as iPhone, because the latest software with the Apple Intelligence requires a newer hardware to run on. So yeah, as just my little comments on Apple, fantastic company. They have brilliant talent working on artificial intelligence. It's just that the company has always, in my opinion, watched what the market is doing and then come and upgraded the cycle for their products, and really surprised. And there's of course, huge amount of loyalty with the Apple products. Apple users want to remain in that ecosystem. So we are seeing that being reflected in the price for the stock. Okay, so now let's take a look at Zscaler. This is the daily chart for Zscaler. Last time we were discussing this, I think it's easier to see on the weekly chart, so I'll show you that. But what the stock is doing is stock has actually rallied a fair amount, and it is pretty much right at the 38.2% retracement. So it's just kind of consolidating here. But the really important thing is that it took out the highs of 12th of June 2024, so starting a new swing. And in my opinion, I think there is like a smaller ABCD. That's the kind of pattern it is moving in. So we can see some higher prices to come around 215. It points out to that, but 220 is the 61.8% retracement. 215, 220 is looks like where the stock wants to go. Unless it breaks below 175, then the C swing will basically invalidate this ABCD pattern that we are looking to the upside. Now, something I think it's a little bit easier or to see on the weekly chart. Here we go. So on the weekly chart, we can see that there's been a pretty nice consolidation for this stock around for quite a while, actually, ever since it bottomed April of 2023. It took a while for this consolidation to take place. It's a really nice cup sort of a formation here. um, Maybe it's a cup and handle as well, although I don't really follow those patterns that much because we normally do the one-to-one price projection. But it could be if it is able to break out of this one. And then I think it's in this B, this blue ABCD. This is where it is moving. with a target of about 320 possibly, which will also be the 78.6% retracement. So we'll have a confluence of the pattern and the Fibonacci retracement coming together. So that could be a strong resistance level on the weekly chart, and ultimately the chances are that this is in fact moving in this bigger black cycle highlighted in ABCD, which could see the stock move as high as 430 to 455, which is going to be the 1.272 expansion of the BC swing. Fair amount of volatility in this stock, to be honest, and there is also a case for an inverse head and shoulder pattern. Let me actually quickly see that there is, I think there is a pretty good symmetry for this, because for head and shoulders I really like to see symmetry, and there is very nice symmetry, as you can see that. Here we go. So you see how nicely symmetric they are. So I am also going to label this as a inverse head and shoulder. Here we go. So that is gonna be our head. Here we go. And then we're gonna have the left shoulder, and then we'll have the right shoulder, and very nice amount of symmetry in this. This is how I like to see head and shoulder patterns. I want to see a nice amount of symmetry between the left shoulder with respect to the head, and then the right shoulder with respect to the head in terms of the time taken. So it's there. So that's what I like about it. So that's great. Then let's take a look at the IBM stock. Here we go. IBM is also having a rally today. This stock has plenty of things related to artificial intelligence. They have been doing that for quite some time, to be honest. And some of this, they are actually making the open source license. They're making it available for other developers to use. So they're opening up their ecosystem. They're opening up the research. Also, the stock pays a pretty good dividend as well. So it's also a dividend paying stock. For us, from a technical perspective, what was really important was this level around 160, 162. And the reason is that when we had a previous correction, and mind you, this correction lasted a long time. It started around 13th of December 2022, and it kind of finished with a double bottom around 9th of May 2023. So almost more than a year it took in time. And now I've not measured the time in here. 13th of March 2024. So of course it's much less time travel, but in terms of the magnitude, it's identical. um, and this stock kind of likes to do double bottoms for some reason. So a bottom which is a double bottom, a bottom and a bottom, a double bottom here. So pretty interesting what this stock is doing. Let's draw a retracement to see where it is. And here we go. Okay, it's right at 38.2% retracement, and it's been there before as well. And the interesting part is that from 30.2% retracement, it was not able to close above it. So it's making a second attempt, and it could be an ABCD move higher as well. Ultimately we have structural resistance nearby as well, so it needs to get above that. But the chances are it's going for 185, which is 61.8% retracement. On the weekly chart, it looks a little bit easier to see on the price action, and we can see that the price is tapping the 20 period moving average. There is a upward kind of a drop slowly, but surely it's kind of moving higher. And we could in fact I've drawn a trend line here. So there is support from the trend line coming in here as well. So again, the key will be this 30.2% retracement, getting above this on a good closing basis. I think the stock will be pretty good on its way to the upside. There's a good chance for that. Okay, and now let's take a look at NVIDIA. Here we go. This is the daily chart for NVIDIA, and what we can see is a pullback in NVIDIA. I think we were watching for 1,350 as kind of the target we had, and before the split, and the market has actually um, met that target and exceeded that, and now a pullback is actually kind of expected because yeah, there we go. It's almost 38.2% retracement because it has had a fantastic run. And also the other thing is that some of the reports I'm hearing about NVIDIA is their chips, some of the latest chips are expensive. Its customers include these big companies, and some of these companies, which are the customers, are now thinking about having their own chips designed. So there is going to be more and more competition that will come for NVIDIA products. It's a fantastic company. They'll keep on innovating. They have a really long lead in comparison to many of their own customers who might be designing their own chips for their products. So I think it'll take quite a while for the competition to catch up. But the key thing is that the competition is beginning to catch up, or they're at least putting in plans, and that will begin to weigh in on the stock. So this is why a further pullback cannot be out of question for this stock. Okay, let's take a look at Amazon. Here we go. So Amazon stock doing pretty good, pretty strong. It's taken out these all-time highs, so making new all-time highs. Fantastic. On the weekly chart, we can see that it's clearly above these the old highs coming in from the 2021. So fantastic, really good for the new CEO Andy Jassy. Sure, he's been able to keep the company going and keep the shareholders happy. So that's great stuff. Closing at $200 per share level, and then we'll take a look at Shopify. The Shopify stock seems to be recovering. It had a massive retracement around here when the earnings had come and fell right into the kind of region we were watching for. In fact, it went a little bit lower to about $55. So it's just consolidating here, but looks like this whole e-commerce trend is coming back. Maybe because of the expectation for inflation are pairing lower, excuse me, which means that the consumer actually might start a cycle of buying more products with holidays approaching towards quite a while to go. But these kind of stocks, they begin to move earlier, because the merchandisers or the merchants, they will be putting up their stores in for the holiday seasons a little bit early. They have to. So again, I think it's got a chance to go and complete this pattern shown blue around $100 per share level, 101. So really interesting one to watch. Now let's take a look at Netflix. The video is getting a little bit longer, so I do apologize. Yeah, so I think it's gonna go and try to make a new high. Most likely, it's just very very close. And then if we take a look at Meta, formerly Facebook, it's just consolidating around here, but really really strong stock, and it found support from 433, which is 30.2% retracement. Yeah, there is a chance it might go for 1.618 expansion of this BC swing, around 568 $570 per share level. That's possible. And then let's take a look at, last but not least, is Roblox. Here we go. This is the weekly chart for Roblox. Roblox had been a stock which we like to watch for because of its relation with Metaverse. And this stock has just been, in a really, really long consolidation. It has disappointed us on several times because whenever it looked like a point C will hold, that actually broke whenever the earnings came out. So there is still a chance that we might be in this red one here, which could see the top of this range being tested around 53. Ultimately, we think that the stock might be able to get to this 38.2% retracement around $67 per share level, and that's going to be the real test, because if the stock is strong and it begins to overtake this possible resistance level, then I think ultimately it's going to go test this $147 per share highs, and maybe even take out those, and we could have a brilliant run in this stock. Again, just watching this really carefully, a little bit frustrating, because just being in a very long consolidation. It's like a spring, the Wyckoff concept for consolidation around here. But we'll keep you informed as we like to watch this stock. Thank you very much for watching the video. Good luck and good trading, and speak to you guys soon, and have a great day.